Okay. Before we start, we have only 7 students here. We agree that it is 8 o'clock now. Okay. Now, what we are saying is this. If I acquire 10%, 10%, 10% is a simple investment where we apply IFRS 9. Simple investments. And now acquire additional 60% in the same company. It has moved from simple investment to subsidiary with total investment of 70%. So this is first way. Second way can be from associate. For example, he has 30%. This is an associate. He now bought additional 50% again, becomes a subsidiary of 80%. This is different from fellow subsidiary, where he has 0, he acquired the 80%. Here we are talking about acquiring initial investments does not give control. It is the further acquisition that gives control. After I've established this is what they give me in exam. Things to know when it is piecemeal acquisition. Things to know. Don't forget, it's different from he has 60. He has 60%. He now acquire additional 30%. He has control initially. He now say acquire additional 30. That will give me 90%. He increase his holding, but he has control initially. It's different from this. The first one does not have control. It was the second subsequent purchase. That means the second investment that will not give control. That is what we are to do. If that be the case, what is my own duty in exam? Things to know. Things to know. One, things to know. It's just only four things you must know in piecemeal acquisition. Piecemeal, no, piecemeal. So, first thing, calculation of goodwill. One, calculation of goodwill will change a little. That's one. Two. The second purchase will be the date of acquisition. Acquisition. Therefore, the retained earning and net assets and the net assets should be used for goodwill for the purpose of calculating goodwill. Don't mind the grammar, you understand. Second purchase will be the date of acquisition. Therefore, the retained earning and the net asset should be used for the purpose of calculating goodwill. Then we would recognize the previous investments by calculating gain or loss on previous investments. That is it. Then fourth, are they in the same line of reporting? But same line of report. We will now take all these for one after the other. We'll now take all these for one after the other. Let's go to the calculation of goodwill. We change a little. What will change the calculator of for me the goodwill I will use? If I want to calculate goodwill now, I want to calculate goodwill in piecemeal acquisition. Consideration. To have plus of the previous investment plus the fair value of previous investment. This will now give you total cost of investment for the goodwill calculation. I will now add NCI to give me the purchase consideration. I will now less the net assets. To give me goodwill. Goodwill slash gain on purchase bargain. That is it. Now, what change in the calculation of the goodwill? It is just this fair value of the previous investment. That is what changed in the calculation of goodwill. Fair value of the previous investment. Now, look at it now. For example, when the question was said to you, now, let's transform from this question. This is it. Let's take one of these questions. Okay, let's look at this. At the year start, just to test number one, the goodwill calculation. At the year starts, Pomegranate purchased 30% of equity of Satsuma. The investment was classified 10% is simple investment. As one, which the gain should be reported in true profit or loss. Fair value, true profit or loss. Cost of investment was 110. Exactly halfway through the years, One Granite acquire additional 70% shares of capital of Sasuma and 30% of the share capital of Artichoke. So, Sasuma is now a subsidiary, moving from a simple investment to control subsidiary. Now, how do I calculate goodwill in this situation? What is the consideration transfer to have control? How much do you pay for the 70% plus the fair value of the previous investment? Let's read further. Now, said, Rocket acquired 70% as well by way of share exchange. Pomegranate issue 5 of its own shares for every 2 shares. The market value of Pomegranate shares was 12 naira at that day. Good. 5.2. To calculate goodwill now, the share issue has not yet been recorded. The fair value of the previously owned 10% equity had risen to be 250. The fair value of the previous investment is now 250. So in exam, if I want to calculate goodwill for this now, what is the consideration transfer to have control? Initial investment. I will not say, okay, no problem. 10% initially. What is the growth structure now? Initial 10% plus a further acquisition, oh, he has control, 80%. What is the fair value of this 10% on the day he has control? Which the question will supply us at what? 250. What is the consideration transfer to have control? How much does he pay for the 70%? He said by way of share exchange. I will say total numbers of shares is subsidiary because the values of shares all over nominal value. What is the value? He has 100. Divided by nominal value of 1 to give me 100. He acquires 70, 0.7 times 100. 7. Is it 7 or 70? 70. How does it pay for the 70 share consideration? Parent over subsidiary is 5/2. Parent over subsidiary 5/2 times 70. 5/2 times 70.
175.
175. What is the market price per share of the parent has given me? Cost of investment debit. 175 times 12.
2,100.
2,100. To calculate goodwill now. To calculate goodwill now. Consideration transfer to have control. The consideration transfer to have control, which is 2:1, plus fair value of the previous 10%, 250. This is the total cost of investment that I will now add SCI. So what change in the cost? What change is the fair value of the previous investments. to calculate goodwill now, the day he has control. What is the fair value of the previous investment? You must know. That is all. Let's take another one. Let me show you another one. Look at it. April 1st, 2014, you acquired 30%, cost of 120. On 1st April 2016, you acquired 50% at the cost of 260. I will now say, this 30%, what is the fair value of the 260 plus what is the fair value of the 30% on 1st April 2016? They cannot be the same figure. What is the fair value of this 50% and the 30% which you have acquired in 1st April 2014 in 2016 and you have control? How much you have paid to have control? 260. The question will not tell me. Not as issue share capital. Where is the fair value? Yes. Look at it. The estimated fair value of initial investment in 30% as shares of 30 was now 150. On the day he has control, what is the fair value? And at the estimated value of the goodwill, the estimated fair value of initial investment in 30% shares of Tata was now 150. It says at 31st March 2016, not 2017. So you must know the question will give you, but sometimes the question will not give you. Look at it again. This one did not give us. Ginger. Ginger Limited acquires 5% of garlic. This is an associate on January for 242 and exercise significant influence over the financial. The fair value of garlic identifiable net asset was this. A further 30% stake was acquired by Ginger in Garlic Limited. For the fair value of Garlic Limited identifiable net assets was this. Let's look for the fair value of the previous investment. What is the fair value of the previous investment? Or do you want me to use it at cost? It must give me unless. Okay, you look at it now. As at 30th September 2022, when does he acquire 35%? A further 35%. Look at it. As at 30th September 2022, he has given me market price. So I'll use the market price per share to determine the fair value of the previous investment. And to also value the fair value if it is not called interest, is valued at fair value. Chicha Limited elected to mention not controlling its acquisition at fair value. Good. So I can determine the fair value of the previous investment because you have given me market price. What I will now do in the question? What is the share capital? The share capital is 960. 960. Initial 25% at 1 naira. I'll just go to. You acquire 960. You have a 960 out of it 25%. So to determine the fair value of the previous investment now, 25%, or say fair value of previous investments. Total numbers of shares in subsidiary, 25%, equals to 960. Value of 1, 960. This is the total shares, 0.25 times 960 times 0.5. That's all. That will give you the value of the previous investment. Because that was the market price per shares on that day. Immediately you can do this in exam, you are done. What does it cost? $0.25 times 960 times 960, 240 times 14.5. So fair value of the previous investment for the goodwill calculation 3480. That is it. Because they acquire holding. Right. The market price was 14 naira 50 kobo. The day you acquire. That is what we are saying. What is the market price per shares on the day you acquire? The question has supplied me. So, any issue before we go to the second one? Any issue before we go to the second one? Any issue? What is the fair value of the previous investment in Ginger? They have look at it. Ginger question. That's NCR. Total cost of investment. Look at it. 34. That is the fair value of the previous investment. The total cost of investment for my goodwill calculation. How much does he pay for the 35% to have control? Consideration transfer to have control. Plus the fair value of the previous. What change? What does it change in the goodwill calculation? Is the fair value of the previous investment. No more. That is the only changes. What change between the two? What you have learned, what you have known, is the fair value of the previous investment. No more. That is it. In short, if you can apply those 4 things that I've told you, you are good to go. In piecemeal. It's just only 4 things. The goodwill calculation will change slightly. What makes it change? Fair value of the previous value. The second purchase, when he has the second investment, is the net asset at the date of acquisition. If I want to pick the net asset at the date of the day he purchased second investment, the day he has control. That is the net asset. That is what we are saying. The day he has control, if I want to pick now, net asset of this day, this is the net asset on the day he purchase additional 35% to have control. The day he purchase additional 35%. Yes, you have control now. That is the second thing you need to know. There is nothing concern you with the initial investments. He does not have control. It is when he now purchase additional investment that he now asks, how can I still split me twice? The last time was in 2017. The question was there. The question that the test said it was there. That was the last time the test split me. They've never tested it again. Which day do I use as the date of acquisition? The day he purchased a second investment. The net asset on that day, the return earning on that day should be used as the date of acquisition. Look at the figure we pick, 11040. Let's go to the question. We'll see. We go to the C. 11040. What is the date? A further 35% share was acquired by Ginger in Garlic on 30,000 for consideration transfer to have control. The fair value of Garlic Limited and its Bible net asset on that day. This is what I will use. That is the date of acquisition. That is what the second one is saying. The second one is saying, oh, this is the date of acquisition. The third one, before we start solving question. The third one, I will calculate gain or loss on previous investments. I will not calculate gain or loss on previous investments. I will start with simple. You will not see associates. I will calculate gain or loss on previous investments. That is all. If you can calculate gain or loss on previous investments, you are good to go. Lastly, are they in the same line of reporting? That is only 4 things you need to know. On Sunday, we are going to run the class from 3 o'clock to 7 o'clock. And we are going to trash 2 topics out of the system from 3 to 7. 4 hours. To trash equity transaction and sub. So we'll now go to SBR question from next week. It's SBR. All those SBR questions, you will now be looking at it. How can they form? Then in the first week in November, go and be reading. We'll just be sending solution question if you have any issue. That you cannot do this lecture. We are supposed to even do lecture. A month to the exam, we are finished. We start reading. If you ask question, we post question, we send solution. Just answer. And you can use your Saturday and Sunday to read properly. Because you need to read. There's no the amount of the quality of the lecture. Students still need to read. I will start with how to calculate gain or loss on previous investment. I will start with simple. Then come out to associates. Then line of reporting, I will use question to answer that. We just go to start solving question. Okay, let's see. Let's use let me take public question. This is look at this now. Okay, you cannot do this minute. On 1st April, he acquired 30%. Now, before I forget, in case you are not giving fair value of the previous investment, there are some questions like that. They will not give you market price to determine. Look at this question. On 1st June 2003, 30% at the cost of 15. On 1st June 2004, 50% at the cost of 50. If you read throughout this question, you will not see fair value of the previous investments. He acquired 1st June 2003. He had 30%. A year later, 1st June 2004, he now has 50%. What is the value of this 30% on this date? You will not see the fair value of the previous investment. You will now use your mass knowledge. What is the share capital? 10 million. Nominal value 1 naira, so 10 million. I will now use my mass knowledge to determine it. How? 10 million. Let me show you. In case you are not giving fair value of the previous investment, you now calculate it. You now calculate by saying, okay, 30% you acquire. On which day does you first of all acquire 30% at a cost of 15. He acquire additional 50% at a cost, I think it's 30 million. Let's see. %50 at a cost of 30 million on 1st June. So I will now use my mass knowledge that what is the total numbers of shares in subsidiary because the values of shares all over nominal value 10 million over 1 naira equals to 10. So you pay 50%, 0.5, 50% times 10 million. You give me 5 million shares. Or let's say 5 million shares equals to 30 million. How much is each shares? Or now the market price per shares will now be 30 million divided by 5 million. So the market price per shares will now be 6 naira. So if I want to acquire 30% on 1st June 2014, the 30% you acquire on 1st June 2013, 1st June 2014. If I want to acquire this 30%, I will acquire it at market price. So market price of 6 naira, I will now say 0.3 times 10 million shares, 3 million. So how much is the 3 million shares? 3 million times 6 naira, 18 million. So if you want to acquire 30% shares on this day to give you 18 million, if you want to acquire 30% today, 18 million. To fill my tank 2 years ago could be 10,000. What is the fair value of filling tank today? What is the fair value of filling the tank today? That's what it's saying.
Economy.
So if I don't want, so I can also use alternative method, or if 50% equals to 30 million, how much will 30% equals to? By the time you cross multiply, that's 0.5 equals to 30 and 0.3. Because this one is S, I will now divide by 0.5. It will still give you 18. By saying if 50% equals to 30 million, 30% will now equals to S. You will now cross multiply. You will still get 18 million. Does it make gain on previous investment? Third one, gain or loss on previous investments? Gain or loss? Gain or loss on previous investment? What is the fair value of previous investments? 18. Carrying amount? 15. Of course, it made a gain of 3 because the fair value of today's investment is more than what we have in the book. A gain of 3 million will be worth it. That is it. Any issue? No. Let's start the question. Let me first of all pick Pablo because the solution is from the different solution is sent to the platform. Let me pick Pablo. In exam, let's assume I was comforted. Pablo. Pablo Limited. On 1st July 2019, Pablo acquired 10% holding of Escobar when the fair value of the net asset was 260. A purchase consideration of 24 million. On 1st July 2021, 2 years later, Pablo Limited further acquired 70% holding in Escobar Limited when the fair value of the net asset was 368. Good. The day he has control, 70%, 1st July 2021, and the purchase consideration was 296. The following information will be relevant to the consolidated financial statement of Pablo Limited. The estimated fair value of initial 10% investment share of Escobar was 32 million. Good. Pablo wishes to use two fair value method of accounting for the acquisition of Escobar Limited. On 1st July 2021, the estimated fair value, good. The difference between the carrying amount, blah, blah, blah. What is the, in Leon, what does he have in Leon? What does the fee in Leon? So that can start. On 1st July 2021, Pablo Limited acquired 25% holding in Leon. So Leon is an associate. Leon is an associate. While Escobar is acquired in 2 stages. Initial 10%, then a further 70%. So Escobar has become a subsidiary. Escobar has become a subsidiary. With this, I will now open everything. Let me share my board. Before we go to question, any issue, ask me question, any issue. Any issue. Before you ask me any question. Before we start solving questions, you have understood that Escobar is a subsidiary that was acquired in stages. First 10% and additional. So the absence of no question, just give me a minute.
Yeah.
Okay. I will now open everything. Pablo. Consolidated statements of financial position as at 30th June 2022. First one, timetable, no current assets. 1024 plus 352. I will not add you down. Investment in Escobar, investment in Leon. He has investment in associates. Goodwill. And current assets. Current asset, utilize this. Current assets. Current asset, we have 435 plus 152. We don't consolidate associates. This is my total assets. Total assets, equities, and liabilities. Share capital. Evaluation reserve. Retail earn. NCR. No current liability. 512 plus 24. Current liability. 171 plus 104. That's all. restructure, adjusted, TN, or subsidiary, as per SOFP. I need to determine the net assets. Termination. Net assets of subsidiary. Items. DOE. DOC. Use. Goodwill. Goodwill. Cost of investments. Add NCI. Which is consideration. Net asset at the date of option. Goodwill. TN of the parent. Parent. As per SOP. NCI. NCI. Date of acquisition. Investment in associates. Goods. That's all. This is what I open exam. Now start reading and be posting. Pablo Limited. Pablo Limited is a very successful SME business. Is operating in a very good commercial location in Abuja. Following at the senior financial position of Abuja as attracted June. Good. Let's open the working. Okay. On 1st July 2019, Pablo Limited acquired 10%. Oh, 1st July 2019. He has 10%. Let's go. When the fair value of the net assets are, what do I need net asset? He has given me net assets. This is the date. This is the percentage of net assets of 10%. What is the net as 260? We only fair value simple investments at a purchase price of 24. Costs. 24. Good. That was the search. Pablo Limited further on 1st July 2021. Oh, 1st July 2021. He further acquired 70%. So the holding is now 80%. No more simple investment. 80%. 80%. When the fair value of the net asset, yes, I need this net asset. Net asset is second purchase. And the purchase consideration was 296. If you go to the book, this is what you will find. Addition of these two. As it been recorded, that is what you will see. 24 plus 296. $320. That go to the non-current assets. That is what you will see. But to calculate goodwill, anybody that go and use 320 will come back next night. That will not be your portion. To calculate goodwill increase me acquisition. The total cost of investment to be used now. Total cost of investment will not be consideration transfer to have control. Transfer to have control. To have control. Which is 296. Plus the fair value of the 10% you acquired in 2019. What is fair value? 2021. Fair value of the previous 10%. That's all. I will read further. Net asset 368. Oh, he has given me net assets at the date of acquisition. He says the day acquired second
32.
purchase 360. 368. The net assets. Only additional information will be relevant to the portfolio value. The estimate of the fair value of initial 10% investment in the shares of Escobar Limited was 32 million. Oh, on 30th 2021. The fair value of the previous investments is now 30 million. So it starts at 2 million. To calculate goodwill. But the goodwill calculation now, cost of investment to use. What is the fair value of the previous investment? 32. This will now give us 8, 11, 318 for my goodwill. Does it make gain or loss on previous investments? Because I need to recognize previous investment. Does it make gain or loss? And that's a gain or loss on previous investments. Fair value of previous investments, 32. The cost of previous investments, 24. Gain on previous investment, 8. That is the gain. 8. What we are doing to the gain? I will now credit the TN of the parents. I will now say you have the gain on previous investments. 8. as per SOP. What was the TN? 3112. Pablo Limited wishes to use fair value method of accounting for the absorption of Escobar Limited. On first January, the estimated fair value of non-controlling interest is 76. Oh, fair value of SCI. To calculate goodwill, let's see. What is the figure? Let's pick the figure. 318. 318.
Excuse me, sir. 296 plus 32 is
Is what?
328.
328. Okay.
Yes, sir.
Oh, thank you. We'll have been looking for figure. 9 plus 3, okay, is 12. 328. Fair value of the previous investment now. I'll go and pick 328 for the goodwill calculation. Add NCI. What he has given me the fair value of NCI. 76. This is the purchase. How much is it? 328 plus 76.
404.
Plus 76.
404.
404. I'll now less the net assets. What is the net asset at the date of acquisition? He has given me in the question, which I have used 368. 404 minus 368. 36. Goodwill. I don't know whether I'm going to be a payment. So, second, I say at the date of acquisition, 76. Good. Next, the difference between the current amount of Escobar Limited net asset and their fair value at this was due to land value at a cost on first at a fair value of 20 million in excess of the carrying amount. There's no be subsequent changes in the net. Oh, he has given me valuation surplus on land. So I can look for the retaining at the date of acquisition. He has given me land. That's only two things. It's either you give me retaining, look for land, or you give me land, look for retaining. That's the pack. So now, what do I do? I'll just pick the figure. What is the shares? The shares in subsidiary 208. 208. There's no value. I don't know the retail any. They said revaluation surplus on land. How much revaluation surplus on land? 20 million. Therefore, I can get my retail at the date of acquisition. I say 208 plus 20 minus 368. The revaluation return is 140. Balance figure. Return is 140. You have given me evaluation surplus on land. The second aspect of the land, we'll go and debit my PPE was 20. Revaluation of no depreciation because it's a land. So far. Next, on 1st July, Pablo acquired 5% holding million when the fair value of the net asset was 160. Purchase consideration of 48. Has it been recorded? I'll go and check. Oh, it has been recorded. Cost of investment 48. Rent 80%. NCI 30%. Associate 20. This I'm taking that. %25%. As per SOP, what was in the retail earning of the subsidiary? 168. Good. Now, why does it give us the net asset of associates? 25%. It does not give me return. The purchase consideration of 48. Cost of investment in associate 48. 48. Good. Cost of investment in associate is 48. Therefore, what I need to share return of associate. It does not give me return. It has given me net assets of 160. And
Your board is no longer moving.
Of the land 12.8 in excess of the carrying value. Okay, no problem. You have given me, let's do it here. You have given us the net assets. Associate now. Net assets of associates. Why do you give me net asset of associates? I will say, okay, items, DOA, DOC. What is the shares? He has given me net asset of associates. How much is the net asset of associates?
160.
According to the question, 160. I'll go and pick the shares. What is the shares in associates? Go and pick the shares in associates. Share 184. We are looking for retail earning and that. Next adjustment. 1st July 2021, the fair value of Leon Land Limited was 12.8 million in excess of the carry value. There is a valuation surplus on land of 12.8. Can I determine my return? Yes. There will be no impairment investment in Leon Limited. I cannot determine my return. Yes. I say 184 plus 12.8. 196.8 minus 160.
6.8.
That's 6.8. It's a debit balance. That is 6.8. Because the net asset after summing it is more than it's a debit balance of 36.8. So at acquisition 184. There is no further. I'll go to the statement of financial position. Therefore, to the early so that I can share profit 75.2. 75.2. So what is it supposed to share now? DOC minus DOE. 75.2 minus
112. 112.
112. So share of profit. Associate will collect. Share of profit. Parents will collect share of associate profits. Profits 0.25 times 112. That's it. 0.25 times 112.
28.
28.
What do you say?
28.
28.
Then the second leg, investment in associate profits. Share profits 28. That's it. Yes. The goodwill arising on acquisition is stated for impairment at each end. The recoverable amount of the goodwill Escobar Limited on 30 June 2020 was 24 million. Oh, recoverable amount. Recoverable amount. Recoverable. Don't forget, anytime they give me recoverable amount, I must calculate goodwill. Recoverable amount, I must calculate impairment. Recoverable amount can be given in 3 ways. Recoverable amounts to test for impairment. 1, they can give me recoverable amount of cash generating units in subsidiaries. Like digging deep question. They will give me cash generating units in subsidiaries. They can also give me recoverable amount of the goodwill. Recoverable amount of goodwill. They can also give me recoverable amount of subsidiary. These are the 3 ways recoverable to test for impairment. This one is very simple. In case my own calculated goodwill, but this one, I will now go and get net asset of subsidiary at DOC. Date of consolidation, net assets. Also at DOC. Because impairment is tested annually, plus the goodwill. Now, the goodwill depends on 2 things. If it is fair value or share proportionate. If it is fair value, the goodwill belongs to both the parent and SCR. I will add. If it is share proportionate, I will gross it up to get what is called notional goodwill of SCR, the imaginary level of on Sunday. Question, I have package question to analyze this for you. I have package question. I think I have one. But before then, let me send one to you, short one. I have package question, to illustrate these things very well in the question so that you can see when they give you, you know what to do. Package question for you. We are in together. You must pass. It's non-negotiable. The beauty of writing an exam is to pass, especially when the certificate is at near. Especially when the certificate is closer.
Kazi, your voice is becoming faint. Except maybe it's unique to me.
Let me see, man.
It's like maybe you are standing a little bit away from the microphone or from the mouthpiece.
I'm trying to look at.
Maybe my colleagues are hearing you very, but I am not. At times it's very clear, at times it's not.
Let me
Thank you.
do the laptop here. Because I've increased it to 100% now.
It's better now.
I've increased it to 100%, and the laptop is the screen of the laptop that I've been looking so much on the screen nowadays. Someone needs to protect his device. Sorry about that. So you will now see. Those kind of questions you expect. ICANN has tested it. In your last student, it was there. Recoverable amount of subsidy. So they can give you, these are the 3 ways it can come for you to test for impairment. These are the 2 ways it can come. I'm looking for that question. You will enjoy the question. It's one of those things that talks about the recoverable amounts. I don't want to forget. It's giving me the recoverable amount of subsidiary. I'm searching for the question, but I will not see. I will send to you this night so that you can see that when they give us recoverable amount in 2 ways. They will just ask you to calculate. This is right of use of an asset. Okay. I'll look for it later. So I can use it to practice short question. You need to practice. Okay. These are the 3 ways recoverable amount can be given. Is that the recoverable amount of goodwill or recoverable amount of what? Subsidiary. Or recoverable amount cash generating subsidiary. On Sunday, we are going to treat questions on this one very well. We will deal with this one very well. Okay, let's go back to the question. What is my, I will not test for impairment. He has given the recoverable amount of the goodwill. I will not say test for impairment. Test for impairment now. I don't know whether you can hear me very well now.
Yes. Thank
Test
you.
for impairment. I will not say, what is the recoverable amount of the goodwill given? They will tell you. And the carrying amount of my goodwill of my goodwill to know whether it has impaired. Let's go to the question. Let's go and check the carry amount of our goodwill, what we have calculated is 36. And it said recoverable amount is 24. That means it has impaired. Say, okay, carry amount is 36. And the recoverable amount is 24. It has impaired. It's not. How much is the impairment now? I will now say 12. It has impaired by 12. Impairment. Anytime they give you carry amount, recoverable amount of the goodwill, compare with the carrying amount of the goodwill calculated, 12, impairment loss. So I'll credit the goodwill. Go to the goodwill account, go and credit my goodwill with 12. Say impairments. 12 to bring it down to 24. Goodwill to be reported Adios 24. Don't forget, it is fair value. Both the parent and SCI will suffer say impairments. Zero 0.2 times 12. What does it give us? 0.2 times 12.
0.4.
Impairment of 12, 0.2 times 12.
2.4.
2.4 that's impaired. Then parents, because it is fair value, impairment.
0.8
times 12. 0.8 times 12.
9.6.
9.6.
9.6 as impaired. Good. That is it. That is it. I'll go to the next one. During the year, Pablo Limited decided to form a defined benefit pension scheme for its employee. Oh, that means there is no defined benefit plan, pension plan at the beginning. It's during the year. No liability, no asset at the beginning. Good. Thank God you must have done that years 19. The company contributed cash of amounting to 200 million to the scheme, but the only accounting entry, for this has been to include it in its receivable at 30th June 2012, and at 30th June 2022, the following details related to the pension schemes. Present value of the obligation, 253.6. Fair value of the plan assets, 4.6. Before we even do anything, what do you think it is wrong here? What do you think it is wrong here?
The inclusion in receivables is wrong.
Good. Inclusion is the reason. It's totally wrong. It's totally wrong. So I need to correct that entry, that your contribution of 200 should have used to reduce your liability, your pension liability. So not including it in trade receivable. So trade receivable now. If I'm including trade, so that means I've debited my receivable and credit cash. So I will now correct the entry by saying credit minus 200. I will now go to pension plan and debit. This is the first issue. This is the first. You are not supposed to include in a trade receivable. So minus 200 states. So don't forget my pension plan. There's nothing at the beginning. Pension obligation beginning now. And pension liability. We always have liability more than. So the contribution of 200 to reduce the liability. But at the end, what is the liability they've given us? Pension assets. I will now sum the two to give me the liability at the end, which I expect liability to be more than assets. Okay. Present value of the obligation is 253.6, and the fair value of the planned assets. So my net liability now, sorry, my net liability will now be the obligation, which is more than 253.6. We have 253.6 minus the assets. What is the asset? 241.6. 241.6 to give me the total. There is no service cost, no past service cost, current service cost, net interest in the question. It's just what he gave to me, and I will do with it. So, what is now the net liability now?
12.
12, thank you. We now have 12. So, for me to have 12, what will have been debited to the retained? What will have gone to the retained POL will have been, for me to have 12 at the end, what is pension expense to my POL? Now be, this will give me 200 negative. So if I look at it, that means 212 is what I've paid into the pension plan to have liability of 12 at the end. To have liability of 12 at the end. To have my liability of 12 at the end. That is what it's saying. That what will have gone to the retail should have been 212 to have my liability at the end. So I will now debit retail early with 212 to any of the parents. Pension expense to have come. Then 12, my liability at the end will have credited. Pension is not current liability. So I'll go to my current liability, not current liability, add plus 12 to it. That is it. Any question? That is the end of the question. We can now consolidate. But nothing happened to the retail earning. We have 168. Then I'll break it down by saying 208, 168, then 20. 168 minus 140, that will give you 28. Then share profit now between the parent and NCI. Parent will collect 80%. And that's a share profit. 0.8 times 28. How much is the share profit now? 0.8 times 28.
22.4.
Huh?
22.4.
22.4. Then SCR will collect the balance. Share profit.
5.6.
Minus 0.2 times 28. What does it give us?
5.6.
So I can now add them together by saying, can you give me the figure?
79.2.
79.
15.6.
Two figure.
How?
Somebody says
Oh.
79.6.
We are calculating different things, huh?
Oh,
I'm doing
what?
NCI.
Okay, you are
NCI is
calculating
what?
different things.
NCI is
Which one
79.
do you calculate?
NCI
What is the value?
79.2.
Okay, that is confirmed.
79.2K. This is 76 plus. I doubt what you have said.
There's an yeah, it's correct. So
Yes, it's correct now.
it's an
79
impairment.
minus 2.4 plus 5.6. 76 minus 2.4 plus 5.6.
What did I have?
79.2.
79.2, okay. 79.2. Then for the retained earning,
Or parents.
so we have 312 plus 8 plus 28 minus 9.6 minus 212 plus 22.4 is giving me 148.
148.8.
So associate. Forty-eight plus 28, this will give me 16, 676. So we cannot close our book with that. Associate is 79.2 NCI, 79.2, 79, 79.2. This one is 148.8. What is the share capital of the parents? Let's check the share capital of the parents.
$760.
760. Evaluation reserve 72. And I say 760.
72.
The non-current liability, we have 512 plus 24 plus 12, 548. Then 171 plus 1 of 275. 75. So this is 76 plus 72 plus 148.8 plus 79.2 plus 548 plus 275 is giving me 1883. Then investment in associate is 76. The goodwill is 24. Current assets 435. plus 152 minus 387. Then tangible non-current asset 024 plus 352 plus 20 1396. Plus
Correct.
6,
1883.
18. That's all.
Too many things to remember.
No, it's me just only 4 things to remember. Just 4 things to remember.
To leave things.
To calculate goodwill. I'm going to do the summary of what you need to remember in each of the. Immediately you finish, I have it already. In each of the type of investment, except following subsidiary, which is normal consolidated process, piecemeal, disposal, foreign subsidiary, sub and this shape, equity transaction. What are the things to remember? Like piecemeal, just only 4 things. One, you need to remember that calculation of goodwill will change slightly. How do we calculate good? Say fair value of the previous investment plus the consideration transfer to have control. The net asset to use is the net asset of the second purchase of investments is what I will use. Then I need to calculate gain or loss on previous investments, which I will use the fair value of the previous investment. Then are they in the same line of reporting? We have not done that. We will do 2 more questions. No, 1 more question on peacemaking. Then with the transaction. What is it? Let me send this to you.
The only thing I see, not the only thing, but the way you treated this benefit pension scheme, the difference between that present value of obligation and fair value of the plan assets, usually it goes to, I think it goes to OCI, maybe? It goes to OCI.
Yeah.
You know, when we treated it in class, that difference goes to
Actuary measurements.
Oh, okay. Say liability is higher, the obligation is higher. Okay, no problem.
This one is giving their objects extracted. And then when they give us, you will see everything clearly. Because we will remeasurement. That one will go to the OCI, either gain or loss. So let me send this to the platform.
This is the balance, not the. Okay, this is the balance.
Yes. Which one do you foresee you can test this diet? Which one? Is there any opinion on what can be tested this diet? You don't even know. We don't know what they can bring because of what they did last night. We don't know
They
what
don't
they
use
can
to
bring.
foresee ICANN questions because ICANN can shock you. Last day, they didn't bring group account for this thing now. I be last to diet for skills. They didn't bring out group accounts after learning group accounts.
Last diet, it was there. Group account is in skill.
No,
It
last
was
to
last
diet. They
year.
didn't bring out skills like
Last
last
two
to diet.
diets.
They didn't bring out for November diet. They didn't
Yes.
bring it out.
That's what the second time they are doing that rubbish. We can't expect us a group account that has about 25% of the syllabus was not tested. They now brought 2 questions from IES1. IES1 that is just only 5%. Man, I cannot understand the rationale. So me, I will not be labor in vain. Teaching group. Mm. You can check yours. Even last night, they changed the reporting style. No consolidate. Just change everything. Mm. Okay, there's not too much on this. Let's go to when it is from associates. And let me see question we can finish before in 1 hour. When it is an associate, they become a subsidiary. It's slightly different from this. You see the reason. Because gain or loss on previous investments in that one. Let me see. Okay. It's a little bit dicey if you don't open your eye. Okay? Okay, let's go to, let's see which question can we finish quickly. I will not take much of your time. Good. I've not done. Okay, let's see this one. Okay. This one is associate and it's a short question. Then on Sunday, we'll not do question. We'll start with that question 1. ETOP Limited is a public limited liability. Had exercised significant influence.
Number, please.
Question 6. ETOP over Lowland Limited, another public limited entity. As many years been obtaining control, ETOP Limited acquired a 40% ordinary shares in Lowland. 40%. On 1st April 2030 for a cash consideration of 2.5 when the retained earning stood at 360. Good. It told me to acquire a further 30% interest in Lowland on 1st April 2019 for a cash consideration of 200 million. As this the retained on Lowland amounted to 860. And the fair value of the previous 40% in Lowland was now 3 million. Good. Now, let's see. He acquired 40% initially for a cash consideration of how much? 2.5. He now acquire additional 30% to have control. Additional 30% for 2.2. 2.5 plus 2.2 will give us 4.7 recorded. 2.5 plus 2.2. He record it at cost, not at carrying amount. That means the gain of previous investment, the share of an associate profit, he has not taken into cognizance of this. This is what it means. The share of associate profits before it becomes a subsidiary. The 40% he will take within when he was an associate to subsidiary, he has not recorded it. He recorded it at cost here. He said at carrying amounts. You will see what I'm saying now. They used to play this prank. Okay. We have established that. Let's quickly open so that we can finish between 1 hour and go to bed. Then see you at 3 o'clock on Sunday. Good. He has control. I will now open everything. It up.
Your screen has not changed.
Your screen hasn't changed.
I know. Uh, it does only 2 ways. It can be from associate to subsidiary, and it can be from simple investment to subsidiary. Like this ETOP. Consolidated statements of financial position as at 31st March 2023. No current assets. PPE. Five, 0 plus 40. Goodwill. assets, inventory, two seven plus 180. Trade receivable, 2120 plus 180 cash, 1130 plus 770,000 assets, equities and liabilities, share capital, 10. Let me see. Non-current liability, non-current liability, 10% loan notes, 18 plus 12. Current liability, trade name, 1560 plus 840. Current liability, current tax, 350 plus 250. What is it? No structure. Adjusted. In subsidiary. Termination of net assets as per SFP. Subsidiary. Goodwill. Need to calculate cost of investments. Add NCR. Purchase consideration. We in in units. Transfer. Transfer. Yes, date of acquisition. That's all. I'll now start posting. Don't forget the rules. So the question says, let's do this one work. Question says, ETOP Limited, a public limited entity, has significant influence over Lowland Limited, a public limited entity, has many years been obtaining control. ETOP Limited acquired a 40% shareholding on Lowland on 1st April 2013. 1st April 2013, date of acquisition. Yeah, date of acquiring 40%. Date. Yes, April 2013. The percentage acquired in is what? 40%. A cash consideration of 250 million, 2,500 cost 1.5. When the retail earning was 360. Good. Now, additional information one. ETOP Limited acquire a further 30%. He has control now. 70%. A further 30% interest in Lowland on 1st April 2019. 1st April 2019. 80%. For a cash consideration, cash amount 2,200, which is for sale. Now, this is the retail earning. I know that is A60. He has A60. This is the problem I'm telling you. He will share profits between this retail earning, the two of them. He will share profits. Total cost of investment for the goodwill calculation. Let's go to that. So total cost of investment for the goodwill calculation. Consideration transfer to have control. Transfer to have control. How much is the consideration transfer to have control? When does he have control? When he acquired the 30%, it's 2-2. I will now ask, what is the fair value of the previous 40% holding? Fair value of the previous 40% holding. The question will tell me.
200.
Huh?
200, 00.
Oh, okay. Thank you. Fair value of the previous investments is the previous had 40% investment loan was now 3,000 million. it was now 3,000. Initially, it was 2,500. Today now, it is 3,000. So for the goodwill calculation, I will use 5,200. I will now calculate gain or loss on previous investments, but I need to determine what is the carrying amount of the previous investments. The cost of 40%, what is the cost? The cost of 40% is 2,500. 2,500. Share profits of associates. This is the problem with this. If it is not simple investments, it's an associate. You must share profits. And you must look whether the profit has been recorded, has been reported. Does it carry it at carrying amount? How much is the profit is going to collect? 860 minus 360 times 40%. Between these two dates, you must share profit to him. 860. 860 minus 360 times 0.4. What does it give us? Help me with calculator. 860 minus 360 times
200.
200. 47. Wow. 47. What is the cost of the 47? Let's see. 472. It has
27.
not been recorded. It has not been recorded. Because 22 plus 25. If it has been recorded, this is what will have been there in its carry amount. 27. I'll go and put 47.
27.
27. Now, look at the logic. 27. 27. He now bought additional 40%, additional 30%. At what cost? Additional 2,200. If he has recorded the gain, you will have seen 2,200. The money will have been in the investment will have been 4,900. So 200 gain has not been recorded. Sometimes they will carry it at cost. Sometimes they will carry it at carrying amount. What I'm saying is this. Let me go and share so that you understand what I'm saying. Do we need to post the 200, the share? Look at this thing. We have 47. He said 49. Some question will carry it at carrying amount 49. Meaning you don't need to share that 200. That 200 again, you don't need to post it again. Because they posted it by debiting investments and credit retaining for the share of profits. Some will not share it. They want to use your consent that it has not been posted because he carried that cost. He bought the initial 25, additional one, 30%, 2247 instead of 49. So the 200, I'll first of all post the 200 for associates. I'll first of all post this 200 associates. I'll go to the retail and I don't know whether you are getting what I'm saying. I'll go to the retail of the parents. Yeah, they have not posted the 200 share of associate profits. Share of associate profits. 200. You are not carrying as carry amounts. you are carrying it at cost. I will now calculate gain or loss on previous investments. What is the current amount of the previous investment? 27. What is the fair value? 3,000. And as a gain or loss on previous. It's okay. Gain or loss on previous investments. So what is the fair value of previous investments? 3,000. What is now the current amount of previous investments? 27. The gain on previous investment. Previous investments, 300. You must sort of understand this one again. He has not posted the share of profits. Share of profit of retained. The day become an associate and the day you become a subsidiary within that date, 200. So I'll go to the question. Gain on previous investments, 300. Gain on previous investments. That's what we are seeing. That is the plan they used to play. Some will carry it at cost. Some will carry it at carrying amounts. Additional information too. At the time of achieving the control interest in Lowland Limited, the fair value of identifiable net assets approximated their carrying amounts with the following exceptions. With the exceptions of the following items. 1. An item of plant whose fair value exceeds the carrying amounts by 150,000. And on 1st April 2019, the item of plant had a remaining economic life of 6 years. Useful life of 6 years. As at the date of acquisition, I'll go there. What is the net asset? I'll go there. Also items. DOA, DOC, and post. What is the share capital? I'll go and check. The share capital subsidiary 5,000. The retained earning at the date of acquisition, he has given me. They used to have control. Let's click. Where do we put it? A60 on 1st April 2019. A60. A60. Then that said there's a revaluation surplus of how much? 150. Is it PPE? An item
Yes,
of plant. Revaluation surplus on PPE of how much now? 150. Then I need to calculate depreciation. The second leg, don't forget. 150 before we forget. I will debit the PP plus 150. Good. Then what is the useful life of the plant as at 1st April 2019? Is 6 years. The day he has control. 1st April 2019. He has 6 years. So depreciation to charge. Let's do depreciation here. Depreciation 150 divided by 6 times from the date of acquisition to the date we are consolidating. When are we consolidating? We are consolidating in 31st March 2023. So from 1st April 2019 to 31st March 2023, how many years? 1st April 2019 to 31st March 2023.
4 years.
4 years.
So 4 years. So 150 divided by 6 times 4. 150 divided by 6 times 4. 150 divided by 6 times
100.
4.
100.
100.
What is it? 100.
100.
The one we have used, PPE. I will remove from the PPE by crediting PPE on the surplus we have used and also on those. Then depreciation, adjusted return of subsidiary, depreciation. Let's go to the question. Hundred. As per SWP, let's get the return 1660. 1660. Good. That is not the only adjustment. On April 2019, the Director of Return Limited identified a loan launch and an internet-generated database of customers who had the potential of purchasing their product for indefinite period of time. So, although there was no contractual or legal rights associated with this database, a professional expert estimated that the computer of Lowland would prepare to pay 90 million for this database. Lowland Limited had not yet recognized the database as an asset in its individual financial statements. Now, we know the reason why it does not recognize it in its individual financial statements. But for business combination, you must recognize it. So, 90 million. And they say he has indefinite useful life. So the brand name, brand loyalty, trade loyalty of 90 money. Then I'll go and open separate brand name, different from the goodwill. That's why we say leave to space. 90, there was no amortization because he said he has indefinite useful life. Okay. It is the group policy to mention non-controlling interest at proportional share of the net asset of subsidiary at the date of acquisition. Oh, share proportionate. So I can get my goodwill, my net assets. So this will give my net assets. And he acquired 70. 5,000 plus 86. 860 plus 150 plus 90. Any
61.
issue? 6
1,100 naira. 61.
like this.
6100.
6100. Sorry. 6100. So 6,100. So share proportion is now to calculate goodwill, NCI. You have not bring the figure. I will now say 0.3 times 61. 0.3 times 61. What does it give us?
1830.
0.3 chances. What do you say?
1830.
1830. The cost of investment. But we have done that here. Consideration transfer to have control, yes. 5-2. So I'll go and bring my 5-2 for the goodwill calculation. 5-2. 5-2 plus 1830. 5-2 plus 1820. This will give us 0, 3, 0. I will now less the net assets of 6-1. So what is the goodwill? What is the goodwill?
930.
930 is the goodwill to be reported. I don't know whether I implement or we still can. Additional information for now. On 28th of March, Ipo Limited sold goods for 200 million to ETOP Limited sold goods to land at a gross profit margin of 20%. Is there any unsold? I will ask whether is there any unsold in the goods. Then let's see. Okay, Lola Limited neither receive or not receive this goods. Oh, it's in transit. It's in transit too. So goods worth 100 million to Lola top. Okay, 28th of March. So he has not received. It's in transit. So the total everything becomes unsold 100 million. So we can now calculate unrealized profit on inventory. They will do the NIF. Unrealized profit on inventory. Who is the seller?
Parent is the seller.
Okay, thank you. And that's unsold, which is in transit of 100 million and the gross profit margin of 20%. Then unrealized profit on inventory will now equals to 20 over 100 times 100, 20. I say parent is the seller, I will debit parent account. Why do you sell and make profit from your subsidiary? I will credit consolidated inventory minus 20. Then I'll go to return of the parent. Unrealized profits on inventory. 20. That is it. That is it. Next. The current account between Ito Limited and Lotto Limited did not agree due to goods that remain in transit as per note 4 above. Okay. As at 31st March 2023, receivable of Ito Limited included 600 million due from Loanland Limited. Oh, 600 is due. So in the book of the subsidiary, is going to be payable of 500 to the parents because he has not received the 100. It's in transit, and we are talking about inventory. So what do we do? Just say trade receivable. You cannot owe each other. You are a single entity. Then what bring about the differences? It's okay, trade receivable of 600. Inventory that is in transit. So I'll go to the trade payable. We'll eliminate 500.
Can I have my phone?
Minus 500. That's it. Additional information 6. An impairment review carried out on 31st of March 2020 reviewed that neither the goodwill arising on acquisition nor the intangible assets within the indefinite useful life has been impaired. So there was no impairment. They ignore all deferred tax consequence on the acquisition and the fair value measurement of lower land. Lower land limited has not issued any ordinary shares at date of acquisition. Determine requirement. Determine the equity accounting value of investment in low land. That is the first one. As at 31st March 2019, equity investment in loan land. You see now, it's telling you the 40% equity investment. It's asking us what is the value? The equity investment in loan. This is the value to sell. To sell is the value. This is the first requirement. The carry amount is the value. Then calculate the value of goodwill arising on the acquisition. Then all that is done. Then we can now consolidate. That's the end of the question. Anyway, we can now consolidate. That's what I said. For this purpose, as per SYP, what was in the retaining of the parents, let's consolidate now. Retaining of the parents, we have 3490. Then adjusted retaining. We'll remove the depreciation. That will give you 1660 minus 100. What does it give us?
One five 60.
1560 is 1560. I will now bring down. Don't forget share proportionate. We have gotten SCR the date of acquisition 830. The second leg 1830. So the share capital does not change unless there's a bonus issue, which I kind of not tested before. 1560, the 150, 90. When I say 1560 minus 860, 700 will be shared between the parent and NCR. So NCR will collect 30% of share profit. Share profit 0.3 times 700. 0.3 times 700. 0.3. 0.3.
210.
210 will go to this account. So this NCR to be reported 1830 plus 210. So 2040. Then parents we also collect share profits. Share profit. It's going to collect 0.7 times 700 and 700. 0.7 times 700.
490.
190. So I can now add up 3490 plus 500 minus 20 plus 490. 4460. 44. That's the end. I can consolidate now. 4460 NCR 2040. 4460 minus 040. Why this 44? 44. That's the end. Then what is the share capital of the parent? Please, can you give me the share capital of the parent? The share capital of the parent.
10,000.
10,000.
Thank you. 10,000. Then loan notes 1,8 plus 1, 2, 3,000 coming. Then 1,560 plus 840. 840 plus minus 19. 600. So these are our total net, total equities, and let's go to the share capital. What is the value of the goodwill? There was no impairment. Let's bring up goodwill. There was no impairment. 930. Goodwill is 930. 930. There was no impairment. So we have 550 plus 42 plus 50. This one will give me 980. Then inventory 27 plus 18 minus 20 plus 100. This will give me 458. 45. Then trade receivable. You have 3120 plus 2180. 2180 minus 600 or 7. Then cash 1130 plus 70019 as the need. Unason that's 980 plus 930 plus 90 plus 4580 plus 47 plus
22,000.
22,000. I'll go to the equity liability.
The same thing.
Same thing.
It's correct.
22,000 as of. So you can look at this one. Sunday. Don't forget, I got grace. We are going to run the class on Sunday from 3 o'clock to 7 p.m. It's going to be 4 hours. Make sure on Sunday to do more. Which of your courses have you finished? Is there anyone you have finished so that we can use the time?
None. Audit ought to have finished 3 weeks ago, but
Which day do you do it?
it hasn't finished though. We still have 3 chapters to go. Audit hasn't
Which day do
finished.
you do it?
Saturday.
Okay, Saturday. Wow. If it is this 20 week now than better. So you have not finished SFM. People now, they don't used to finish them. I don't know the reason. Have you finished? They say finish it. I've not finished. As only God can finish SFM. I don't want this lecture to exceed more than maximum first week in November, if possible. Ending of October. Just do pray for the one we have taught to come out. So good night. Have a wonderful night rest. I'll be expecting you on Sunday by God grace. We did not see that out. So Mr. Robert, I really appreciate.
Good night, Oga.